So now we're inside. I'm sitting down. No, I don't have any Diet Coke. Nobody was thoughtful enough to make sure that I had some when I got here. I'm much older, and my parts get parched and sore and tired and worn down, but they're young and healthy, and they have no consideration for that whatsoever. That being said, I have just enough elasticity left in my voice to tell you the story of the euro and where we've been and where we're headed. Let's go over to the whiteboard like Austin Goolsbee. Phoebe will hold that. There are 4 major currencies that trade amongst banks and traders and currency speculators. The dollar, the euro, the yen, and the pound. Now, in the current macroeconomy, all 4 of these places have challenges. So what it comes down to is whose balance sheet looks the best at any given time. Now over here, in England, the pound is the least liquid of these 4. It's only used in the UK itself for the most part. The UK badly overextended in the recession, and then compounded the problem by voting the Tories back in, who are throwing their supply side nonsense, feudal nonsense, onto the English economy. It's slow, slow death. You don't want pounds. That leaves us dollars, yen, euros. Now, each of these 3 places has complications as well. It means you have to be, if you're a currency owner, if you're a business person, you have to own all 3. The question is, what is the percentage? If you're an American, you get paid in dollars, you have dollars, so it comes down to how many of those dollars you're going to sell to buy yen and to buy euro. Okay? The reality of our situation is very similar to the situation in the UK. We were co-conspirators in the structured finance fraud that devastated the West. We're co-conspirators in a lot of the debt problems that face the West. However, the Brits have certain socialized imperatives that they're trying to break down. We don't even have those. Obama is trying to install some of those, which are very, very costly, and you hear a lot of braying about. It's leftist deficits on top of rightist deficits accumulated during the Bush years. Any way you look at it, any way you slice it, any way you dice it, you don't want to be a long-term holder of dollars. You hold the dollars that you need. You might hold 20% of your overall net liquid worth in dollars, but not $1 more, and less is probably advisable. Which means you've got 2 currencies that are really what we would call investable in the current climate. The yen, Japanese have a problem with growing fast enough with domestic demand, and they have tremendously highly educated citizens. They have strong social welfare state to keep from massive default, and they have leadership positions both as exporters and as research and development pioneers. They're going to be part of the future. They invest for the future. They're in a low growth period, but they've got a great balance sheet. That means you own yen. You're happy to own yen. You want to own about 48%, half, thereabouts, of your overall liquid net worth in yen. A check. You like that? 48% yen, 20% dollars, no pounds. Steve, can you tell me what percentage of our overall liquid net worth we're going to have invested in euros?
So if we take 20 plus 48, that gives you 68. Assuming that you can't own beyond 100% of anything, which you can't.
32%.
32%.
About a third of your liquid net worth should be invested in the euro. Now you say, Matt, I see the news, the Wall Street Journal. Reuters, CNBC, let alone Fox. Don't I know that the European Union is a failed experiment? That those debts are destroying lives, destroying business? No, that's absurd. At issue, the euro was 106 to the dollar. During the Clinton years of U.S. growth, you remember those? Really happened. The euro traded as low as 86 cents to the dollar. U.S. strong, euro less value. During the Bush years, watch the arrow. You notice that it's the opposite arrow. The euro traded as high as 148 and early in the Obama administration through last summer it got to $1.64. Now the things that you've heard on the news, the things that have been happening since last summer when the euro was at $1.64, in the spring, Greece, which is a teensy tiny little economy. Now, Greece may be the cradle of Western civilization.
It is the cradle of Western civilization.
It has the hottest asses, both men and women, anywhere in Europe. I've studied this. It's a sexy place. It's a historical place. It's a literary place. It's a great place to take siesta. It's a great place to get laid. It's not a big economy. It's like worrying about the U.S. economy based, excuse me, Steve, on what happens in Rhode Island. Many of my very best friends are from Rhode Island, but the Rhode Island economy,
it's tiny.
As a function of the United States economy, is Greece. Greece has troubles because they have no economy. And they have a welfare state that has to be paid for. And they have to fit within the EU guidelines, which advocate, which insist upon, which legislate real world growth, real world control of debt. There are reasons for that. So Greece has its troubles. The euro, which was now trading in the $1.40 range, when the Greek problem hit in May, went all the way down to $1.17. You know what that didn't do? That didn't change any of the dynamics we talked about between the four countries. The EU balance sheet is still stronger than the US balance sheet or the UK balance sheet and moves side to side with the yen to be the strongest currency in the world. So in May, the Greek crisis, the little tiny Greece, brought speculation that whacked the euro back. I said to you, if you were listening, this is no big deal. It doesn't change the dynamics between these four currencies. And that's what eventuated. By November, we were at $1.37 for the euro. The Irish crisis. Remember when we talked about little economies? Well, the Irish are not a small economy like the Greeks, but they're still a small economy in Europe. You know, it's maybe 8%, 12% of the EU economy. That might be generous. I don't have it in front of me. Point being, nothing that's wrong in Ireland is going to sabotage the EU. Bottom line, today, the EU is trading at $1.37, thereabouts. About par for where we are right now. I think that the speculation about the European currency has managed to create a sort of intrinsic, built-in discount. I think fair value for the euro is $1.75. I certainly would not be letting go of euro here. I'd be adding to positions anytime I got from dollar. I'd hold those percentages, and we'll let you know if there's any change in our view. This is Matt's story. I'm a Vagabond Guru at www.vagabondguru.com. Thanks very much.